Welcome back to On the Markets, the podcast where we make sense of the numbers that move the world. I'm Michael, Emily is off for today, and now we're asking a big question, one that touches every corner of the global economy. What happens when the world moves beyond the dollar? For nearly 80 years, the US dollar has been the backbone of international trade, the anchor of global finance, and the currency everyone trusted when things got messy. But that dominance is slowly, quietly, and maybe inevitably being challenged. Let's rewind a bit. The dollar's rise began after World War II, when the Bretton Woods system made it the reference point for global currencies. Even after that system collapsed in the 1970s, the dollar's influence only grew, backed by U.S. economic strength, oil pricing, and deep capital markets. Today, about 90% of foreign exchange trades involve the dollar. It's the currency of comfort, the world's financial language. But in recent years, a new narrative has emerged. Countries asking, why rely so much on one nation's money? From Beijing to Brasilia, conversations are changing. The BRICS bloc, Brazil, Russia, India, China, and South Africa has openly discussed creating an alternative settlement system to reduce dependence on the dollar. China has already launched yuan-based oil contracts, and several African nations are experimenting with trade settlements in local currencies. Even the European Union, traditionally dollar-aligned, is quietly boosting the global profile of the euro in trade and finance. Why? Because in a world of political sanctions, dollar dominance can feel like vulnerability. Control over global money flow equals control over global behavior, and many countries are tired of playing by Washington's rules. Let's talk about what's filling the gap. The euro and yuan. Europe and China are both pushing for monetary independence, though trust and transparency remain hurdles. Regional digital currencies, experiments like Nigeria's Naira, India's digital rupee, and even the Eastern Caribbean D-Cash show growing appetite for currency innovation. Gold and commodities. Central banks worldwide are buying gold at record levels, a hedge against dollar-risk crypto and stablecoins. While still volatile, they represent a philosophical rebellion, money without borders, politics, or permission. We're not talking about one single replacement for the dollar, we're talking about a diversification of trust. Let's be clear, the dollar isn't disappearing anytime soon. Its dominance is built on decades of credibility, deep liquidity, and global faith. But faith can fade. As more nations seek monetary autonomy, the world may shift from a dollar-centric system to a multi-currency ecosystem. That would mean trade settled in yuan or rupees, reserves diversified across currencies, and maybe, just maybe, less U.S. leverage over global economics. The dollar's power isn't just about money, it's about influence. Losing some of that could reshape geopolitics as much as economics. So, what does beyond the dollar really mean? It's not just about replacing a currency, it's about redefining trust, the foundation of every financial system. We may be heading toward a world where money becomes more local, digital, and decentralized, and where no single nation's currency dictates the rhythm of trade. In that world, power becomes plural, and that could make global finance both more balanced and more unpredictable. The dollar built the global economy as we know it. But history has a pattern. No empire and no currency reigns forever. The question isn't whether the dollar's dominance will fade, it's how the world will adapt when it does. Thanks for listening to On the Markets. If you found today's discussion valuable, share it with someone who still thinks the dollar is untouchable. I'm Michael, reminding you, the market moves fast, but understanding it moves you faster. See you next Thursday.